And our next speaker is going to be Kim, and you might want to build a little on what Nick was saying about your company.
So I'm gonna give you a little background on Carnegie, because I feel like that we're a little different even than Joseph, although we're also a private foundation. I always feel like private foundations are somewhere in between pension funds and high net worth individuals, because we are founded by an individual, but we have sort of an institutional quality to us. So unlike Joseph, who has actual mouths to feed, we are only a grant-making foundation, so we're not an operating foundation. And we are the oldest private foundation, started by Andrew Carnegie, just to give you a sense of just the magnitude of what Andrew Carnegie's wealth was. And he founded 22 different foundations. We are the largest and the one that he headed at one point, but
he founded TIF too?
He founded TIF too, Sesame Street.
Sorry.
And a number of other organizations. But just to give you just a sense of the magnitude of the wealth of Andrew Carnegie, in current day dollars, his wealth would be about $309 billion versus everybody talks about Gates at $136 billion. So just the magnitude of his wealth was tremendous. His mandate was 3 different programs. It was education. He felt like you need to if people had the ability to pull themselves up by their pull themselves up by their bootstraps if they were able to educate themselves. So education, he was an immigrant. So he believed in you should come to a country, you should immigrate, you should become a citizen. So we have a democracy program, and he was anti-war. So we have a peace program, and we continue to have those 3 programs. So I just give you a little sense of that and the difference between sort of Joseph, where he actually has mouths to feed. We focus on really big issues. And the benefit of focusing on big issues, in my opinion, is that our expenses are much more variable than Joseph's are. He can't say to a kid, you can only eat breakfast for the next year, and you can't eat breakfast, lunch, and dinner because we lost money. Whereas I can say to the people we give grants to, we're going to have to cut back a little because the endowment is down. So our expenses are highly variable. The only thing that's fixed is the cost of running the foundation, and the cost of running the foundation is relatively small. So we're required to give away 5% of our assets, but it's whatever our assets are. That's what makes it variable, plus expenses, plus whatever it takes to run the investment function. So because we have highly variable, flexible expenses, we run an equity-centric portfolio, very highly equity-centric portfolio. And we're able to handle the volatility just because of what I described. And so when we look at things, we always look at it compared to a public market alternative. So to give you a sense, we've been investing in Africa specifically since about 99, 2000. And right now, we have about a third of our overall, a little bit more than a third of our overall portfolio invested in Africa, all through public equity markets. And we have about 15% of our overall portfolio in 15% of our overall portfolio in emerging markets. So the fact that we have 3% in Africa means that Africa is a pretty substantial part of our emerging markets portfolio. I think the difference between when we first started investing in Africa and now is it was a beta play before, right? You know, we made money just because we made a decision to allocate to Africa, and other people were not willing to allocate to Africa, and we made money on that. It is not a beta play anymore. It is an alpha play. And manager selection and stock selection is highly important, to the point that Nick made. And so people's strategy before could be, I'm just going to invest in Africa, and that would make a difference. And so increasingly, we focus a lot more on what the opportunity set is, where we see the potential to make money, and then we compare all the different opportunities. So right now, there's an increasing push for people moving who had traditionally done public equities to look at private equities, because there are more levers of change there and there are more opportunities. But for us, when we look at public versus private, the private market has to outperform the public market for us to invest in it, because if we're going to lock up capital, it's got to be because we think that we have a better opportunity to make money. And so we've stayed focused on the public markets because of the way we invest in public markets. To Nick's point, we don't invest in the benchmark. We give our managers are benchmark agnostic. We tend to do really small companies. We don't tend to have a lot of commodities, almost no commodities with our managers, which is different than most Africa managers. And we have banks, but we don't tend to have the same banks that are in the benchmark because of the fact that we give them the latitude to look for inefficiencies. As a result of that, it captures a lot of the things that people are going after in private equity, but without the lockup. And so we have focused, we still believe very strongly that Africa is a good market. We've invested in, like I said, we've started in '99, we've invested along the way because we think there's opportunities. We actually think the opportunities are going to be greater over time. When we first invested, there were a lot less developed managers who had experience, who had been doing things in the market. Now there are tons more qualified investors with strong infrastructures who have been there and done things and worked through cycles. But there's a lot of capital right now in the private markets, and it's something that concerns us. And so we spend a lot of time figuring out if the amount of capital is just too big for the opportunity set there, which gives us some pause. But that said, we believe pretty strongly that Africa is going to continue to be a great market to be in over the long term. And like, we are over 100 years old. We expect that someday we'll be 100 years old. And so we try to invest for that long term. And so we see Africa, the continent, as a place that will provide opportunities over a long term. So we continue to look at it.
Thank you, Kim. And
Doing business in Africa. You can't afford to be without Africa Investor.